My name is David Currie from Investec. We've had the results in from the survey that we conducted ahead of this year's event. We were surprised by some of the findings. Firstly, not so much surprised, but who was the respondents. About 80% were single family offices or multi-family offices. The vast majority of those looked after their portfolios in-house, over 80% again. And of those, about 80% had over £500 million worth of assets under management. In terms of what they were after, 2/3 were keen to invest in equity. Obviously the balance across other products, which I'll come on to, but 2/3 were in equity, and they were targeting 5-year returns with an IRR of between 5 and 15%. I think that's something that's likely to come down in expectations over the last few years. In terms of geographies, a real spread, but a very strong preference for what I would deem to be the safer non-emerging nations, falling away very quickly after the UK, the States, etc. The next most popular was Africa with only 33%, so a big step off there. Most stark result was the asset class, 90% of people saying they invested in listed equities, and the smallest response being for structured equities at 30%. In terms of how people invest, the universe was split almost in half. Half would invest with other family offices, and slightly higher would invest with other private equity houses. And then lastly, there was a high number of deals considered. We viewed it to be very high, given that we're speaking to sort of private equity houses all the time. For family offices, there was a big percentage, over half were seriously considering more than 10 deals a year, and a similar amount actually expected to conclude 5. So a very high conversion ratio, maybe partly down to definition, but clearly people are expecting to be active in the coming year.